Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hey everyone, checking back in on VUZI, some nice continuation on Friday after Thursday's video. So that middle Bollinger Band becoming support was a green light for the bulls, but now we have one of two scenarios likely to play out here next week. We can see the Bollinger Bands are still tightening as the range tightened, and the bulls are going to need that Bollinger Band to flatten out and begin ascending to create room to the upside. So scenario one is the bulls are very strong, nice increasing volume, and the bulls would need to see more than 400,000 shares traded and a breakout and close above the upper Bollinger Band to be heading higher from this point. We can see 811 is a clear resistance level, the lower high bounce attempt that the bulls need to get over to change this trend to the upside, this consolidation trend over the past 5 weeks. So again, volume will be the indicator if that is likely or not. Otherwise, we're going to test this upper Bollinger Band likely again on Monday and reject from it just like we did on Friday. Also, $8 psychological resistance is on watch. So that upper Bollinger Band and $8 important levels. So scenario two is rejecting from those levels and pulling back to back test these supports. And that's, in my opinion, going to be a nice bullish entry opportunity, if not already in. The middle Bollinger Band, 751, and this key 50-day at 730. And if you're entering at these levels, if you can stomach enough of a drop here to put your stop loss below the lows of this consolidation, 707 is a double bottom. So if you're looking for a bullish entry at these moving average supports, you're putting your stop loss below 707. And that way, if we see a breakdown, the inability to set some higher highs, and then we continue to see lower lows, you're going to be stopped out before we drop all the way back to 631 here and these lower consolidation levels in the $6 range. So we're on the verge of a bullish MACD cross. RSI back above 50 is a good sign, and it really comes down to Monday and volume and that upper Bollinger Band resistance. If we can't close above it, likely to pull back to the mid $7 range. So the weekly time frame, after a very strong move all of May through July, normal healthy consolidation, low volume, that's what the bulls want to see. And we did lose that 10-week moving average support last week, but very quickly regaining it. And the sign that the bulls were showing up here is the higher high and the higher low after lower highs and lower lows consistently on that consolidation. So I pointed out the bull flag in the last video. There's the flag pole. Your flag is normal healthy consolidation in a parallel trend and then a bullish break. Let's draw that again real quick just to see how clear the bullish break is. And I use the real bodies of the candlesticks with my trend lines. So there's your bull flag, pole, there's your flag, and now getting that clear break, although we want to see some more continuation to the upside to add some emphasis to that clear break, because there's always some wiggle room with regard to how you could draw your trend lines. If I just put it up just a little bit there, now we're still in resistance. So there's definitely some human error, human wiggle room that needs to be allowed for these trends, and I want to see a move over $8 for a clear, convincing break. So let's now look at the hourly a little bit here. We had a clear bullish change in the trend, and I'll point it out. We had a bullish day here on the 24th, which was Wednesday, but we could not hold the back test of this 200 period hourly support once we got above it. So we pulled back. We did bounce off the 20 period, but the inability to hold that level did show some weakness. But here was where the trend shifted. We got back above it. We held it on 1, 2 back tests, and then the bulls continued to hit higher highs, and then one last back test for good measure. So we know 759, the hourly 200 period support, is a key level now that has been back tested and held a few times. So we'll be keeping an eye on that level. It's still descending. It's going to begin leveling out and potentially ascending to the upside here heading into next week. We've got the 20 period hourly support to be watching as well. So a nice recovery at the end of the day on Friday, and it's all about the daily upper Bollinger Band on Monday. I appreciate you watching. Hope you have a great rest of your weekend.